Hey guys, so yeah, I did it. I hit 1K on my paper trading account, and that was basically my goal. So I was trading with a 2K account, basically simulating a 50K funded account because you can only lose 2K, so that's your maximum drawdown. So I was basically trying to just hit 1K, and this took definitely a while, but I finally managed, and I will make a quick recap of the trade I took today, which allowed me basically to hit my goal. So as you can see right here on the daily chart, we are still trading higher. And what I'm looking at is basically the daily buy-side liquidity right here, and also the bearish daily fair value gap right here, and more importantly also the wick, which is basically overlapping with the bearish daily fair value gap. So therefore we expect something like a reaction in here. So let's now drop on a hourly chart. What you can see right here is basically that we traded lower with London close macro, so I think we can also drop to a 50-minute chart. Yeah, looks kind of messy, but it's actually a quite clean delivery today. So we have Asia lows right here, also a really small higher time frame gap for today. We came down within New York open kill zone and then took out Asia lows, and then from there we just rallied higher. And also with the 9:30 opening right here, we just traded higher, took out New York open kill zone buy-side liquidity, we took out London highs, we scrapped daily buy-side liquidity and the daily buy-side liquidity right here, and we traded into consequent encroachment of the daily bearish wick. So that's basically the quadrants of the wick. We have the upper quadrant, consequent encroachment, and the lower quadrant. And right here you can also see basically the range we are trading in. So because that's a market maker buy model to the upside, I measured the range, and I will show you which trade I took today. But before we drop lower, I want to show you, as always, regular trading hours, because that's quite important to my approach. So as you can see right here, we closed right here and opened right here at 9:30, and we have 47 handles. So therefore we have a new opening range gap, which is basically smaller than 120 handles but larger than 40 handles. Therefore we want to see NQ trade back to consequent encroachment, and then basically is able to continue with its higher time frame direction. So as you can see right here, with the opening we traded already lower, almost reaching consequent encroachment. I think in that case you should regard it as we would reach consequent encroachments, so therefore we traded higher. But still we can now, or it would be really nice to see actually that NQ would even deliver lower into the quadrants right here. So don't be confused, it's delayed. So now let's drop to ES. So right here, I think ES is kind of similar. So maybe the only difference right here is the fact that ES is more bullish. So we are just trading a bit higher, taking out the daily buy-side liquidity right here, also trading into the high time frame gap right here, which is basically acting as resistance as long as we are below the high time frame gap, and once we trade basically above it and close above it, we can regard the gap basically as support. So and we'll now drop to the 1-minute chart on NQ and show you my my trade today. So so that's basically delivering the delivery we have for today. So we opened right here with 9:30, traded higher, and we already took out New York open kill zone buy-side liquidity, London highs as well, then traded lower. So and then actually right here, that could have been even a really small ATM model short, trading back to the new opening range gap quadrants. So therefore with that we almost reached consequent encroachment with the wick right here, and a target could have been basically the 9:30 opening price. But to me that's a bit too aggressive. So the trade right here would be really aggressive against the higher time frame trend, because we already have a market maker buy model being in play with sweeping the Asia lows, which is right here. So it's below the wick. So right here we have Asia liquidity. I can show you once more on the 50-minute chart. So we came down, took out the sell liquidity right here. Therefore, a market maker buy model is in play, and we are trading aligned with the higher time frame. Therefore, to take shorts right here against the higher time frame is a bit risky, but yeah, could have been a small scalp. We traded higher, and then I will show you my executions. So what I was looking for, I wanted to see basically that we basically form a market maker sell model to the downside. Why? Because we already reached our objective. We scrapped daily buy sell liquidity right here, and we also traded the first time into a daily bearish fair value gap. So therefore we want to see reaction from there, and we also have the quadrants of the daily bearish wick. And as you can see right here, we really reacted very well to consequent encroachment and basically respected the level and traded lower. And so I took my first short right here. It was a kind of early, so 10:30 is my basically my inside macro, I would say, within the silver bullet. So sometimes you can expect some movement with approaching 10:30, and that was basically what I was hoping for right here. So I shorted right here, mitigated one right here because I really don't or did not like the reaction. So I don't want to see that we close basically within or even above consequent encroachment. And then I got stopped right here. And from there, I actually re-entered with only one contract, so half risk, and looked for longs. In that case, that is actually, I think, quite a wrong approach, I have to admit. Because yeah, we were actually really overexpanded already. We were above all opening prices, and it's more like chasing price. I really have to admit that was not the best entry. Still, I like that I had only really small risk involved in here. And also we came down, scrapped sell liquidity, only traded with the wick below it. So that's definitely a engineered sell liquidity pool right here. But still, we are just too overextended, and in that case, we have to be more patient. So then we formed SMT with ES. So that's really important because for our smart money reversal, we want to see basically that we form SMT. So we have SMT right here, NQ formed a lower low, while ES or SMT formed a higher high. Yeah, that was correct. And so then for a smart money reversal, we need to have basically SMT. We have to see basically a change in the state of the delivery, so CSD, and the right time has to be in play. So with basically approaching 10:30 and also with approaching, more importantly, the London close macro, I wanted to see basically that we would deliver lower. So I entered once more short right here, and what I really liked was the fact that we could not basically trade back to the inversion fair value gap right here. So we entered once more, so one contract right here, one contract right here. And what I really liked was the immediate rebalance. So we traded perfectly to the opening of the order block right here and traded lower. And that's where I basically added my last contract. From there, we displaced lower and then came back one more time, basically yeah, just because we are trading back into 5-minute fair value gaps, therefore we can expect something like more high resistance, but we have to just stick to our stop. And also with basically also seeing the wick right here, we kind of know that NQ will deliver lower, and so therefore was really patient. Still, I did not like the fact that we closed above the immediate rebalance, so it was not the perfect delivery, I have to say. So low resistance, we would have not basically come all the way back even above the bearish breaker, so we would have closed below consequent encroachment. But yeah, still I just mitigated one that wasn't really even a loss. I think was break even, and added a contract once again right here after we displaced through the breaker. So then I really was content that with 10:30 would not 10:30 10:50 we would displace lower with the London close macro, basically attacking AM session liquidity and that was basically the case. So I took my first partial right here, my second partial right here, and my last partial was basically bought right here. So really clean delivery to the downside, and that can also be expected because we have a low resistance delivery to the upside, and therefore we can expect a low resistance delivery to the downside as well. So market maker buy model on the left side and market maker sell model on the right side. And now we'll also like show you yeah, the fact actually I moved my profit target right before I got basically filled. I moved it or I removed it, more importantly, because I kind of knew that with trading below the midnight opening price, we would even reach for lower prices, because still also like on regular trading hours, we could still reach lower back into the new opening range gap. We can maybe take a look to it right here. So yeah, still right here, we did not reach the consequent encroachment level. So therefore I know that we will still trade lower. So just once again, we are delayed, so don't be confused. But yeah, that's basically right here. So yeah, that was even after I got basically bought out of my position. So with trading right here back to consequent encroachment, we are still not done. Why? Because we did not trade it back to consequent encroachment. Therefore, if you just keep your stop basically right here above consequent encroachment of the order block, you can still aim for lower prices and even for the lower quadrant of the basically of the price range right here. So because with regarding the right side of the curve right here as a market maker sell model, we always have to reach at least the upper quadrant. If you regard basically the high right here is basically 0, then that's your upper quadrant, if you understand what I mean. But right here, down here, that would have been external liquidity. That's basically your perfect exit. So if we can reach the external liquidity for a market maker model, that's perfect. But we have to at least reach the upper quadrant. So yeah, but still I'm content with with basically getting filled right here, because we are trading back to the opening prices, back to a higher time frame gap, and we also have the 930 opening price, which is really important right here. So and also like with the time aspect, so right here with 11:15 we are now basically closing the London close macro, so therefore our we spooled already, so now we can kind of expect a more high resistance delivery. But yeah, that's basically it. That was today. What I really like about today is the fact that I have such small losses. So -10, -21, -19, and -40 cents. I don't know if you call it cents in, I don't think points. I think it's, I don't really know. But yeah, really small losses, and then basically recouped everything with just one winning trade. Or you can't really call it recoup. So I made so much more, and I hit finally 1K even and 69 US dollar. So yeah, really nice trading day. Just a really clean delivery, and I'm really proud of my risk management, and also how I basically manage my partials right here. So they are definitely perfect. I mean, with trading more contracts, this is still the most important partial, I would say, because it's like a really important price point where we could reverse or retrace. But still, with trading more contracts, I would be really convinced, or I would really have basically have the I would really have basically the, how you call it, the conviction. Yeah, that's right. So the conviction that we would still trade lower if we did not reach consequent encroachment of the new opening range gap. So yeah, but that's basically it for today. I hope you liked it, and yeah, see you soon.